Good morning, traders and investors. Welcome to the final pre-market prep with StockOdds before the world-renowned event tomorrow at 9 a.m. I hope you all are signed up for that. Joel Elconin here with Rob Friesen of Bright Trading and the founder of StockOdds on this happy Friday. This market caught a bid, and it's a relentless bid. I'm not going to give you the pre-market low. May never see that again. The current high is 44.33. We're up 29 handles. My top number on my sheet is 44.43.50. That's Tuesday's close. And what the heck? We just may get there. Crude, that's in the red by 43 cents at 63.07. New low for the move, trying to rebound. Gold being gold down 230 at 1780.80. Silver, who needs silver? That's down 32 cents at 22.91. Bitcoin up 12.20. Ooh, big area. Keep an eye on 48K in Bitcoin. And Ethereum, that's up $122.50. And I didn't even share my screen that whole time. Sorry about that, folks. Let's bring in Mr. Rob Friesen. And Rob, first thing, what were the odds for the SPY today, open to close? I'm just curious. Do you have that, or am I throwing you a curveball?
No, we can grab it from. Just give me one little sec here, since
Sure.
you're throwing me a quickie here, right? Let's just.
This is PG content here, Rob.
Yeah, exactly. What do we got here? SPY. I'm going to put in. Say a couple other things just to see where
Sure,
things
just to
are
spice it up.
Yeah, GLD. I don't know. Throw in a few things since I'm doing ETFs anyway. Okay, I'll share screen, I guess. Share screen, and that should be the right screen there. Okay, so on an open to close basis, are you seeing my screen okay?
Let's see. It always takes a second.
Mm-hmm.
There we go. There's the screen. It's okay.
So this is open to close for today. So based on the close of yesterday, we're looking at 57.5 odds of being up today.
Oh,
and if we go out 3 days, it enhances it a bit more. Gold, how's gold doing today? It says that the odds are low for it to perform well today. So
it's down $2.
Well, there you go. So if you went long the SPY and short gold, according to our open to close odds, you'd be in the money.
Yep. Right. That's it. You'd be in money on both ends.
Those
are the kind of spreads I could trade.
I like that. So you got to start. You just got to start throwing this stuff on, Joel.
Yeah, we're going to talk about that. We got a little bit.
Yeah. Sign up for my class there, Joel. I'll show you how to use this stuff.
I'll be there.
Okay. Well, you got to pay double. Okay.
Okay.
All right. So yeah. So let's look a little bit here at what the context was coming in for today. So the first thing I noticed was pre-market was the VIX had been sort of reaching up, and I looked at all the news surrounding that rise in the VIX there, and it was all negative, right? Like the taper talk, the Afghanistan thing. I mean, there's just so much sort of backdrop that was kind of negative. And then it just began to shift. You can see that, an hour before the market opened, it just started to tank, right? And then since the market's opened, it's gone down further. So the VIX is a good clue for you. And then I looked at the different markets, like, how the Dow futures are doing, S&P, and what I noticed was that the NASDAQ 100 was the most appealing markets for me. So I'll give you an example of, what I saw here, and then what I went and curated from StockOdds. So these are all the NASDAQ 100 symbols. And so I took odds. I sorted it all by both percent B and RSI. So this number here, if you can see that, that number on Adobe would be the RSI, and this number on Adobe would be the percent B. And then this
Okay.
gives you the subsequent odds right here. So we'll highlight that column so you can really see that. Number of events, and of course, there's lots of events with these stocks. They've had lots of occasions where they've been in these areas before. So I'll just hide that because we don't need that. Average performance is what I'm looking at as well as sharp, but we don't need the rest of this for right now. Okay, I'll just hide that so it's not distracting. Okay, all we want is odds and average performance. So where they agree, where RSI and percent B agree, those were the ones that I pulled out of the NASDAQ 100.
Okay.
The only one that I didn't send an order in on this morning was T-Mobile, and like I said, I normally kind of disregard a lot of the mundane news. I just wasn't sure with this increase of compromised accounts and how the sentiment would be for T-Mobile, so I just pulled it out. So I didn't send an order on that one. How I traded this today was the very first thing I did was, before these orders got filled, because they were already in the market, but they're not filled until the market opens because they're designated as an open order, right? Is I was looking at, let's put in SPY here. I was looking at something interesting this morning, and you probably saw it too. So because it's expiration, and we tend to look at premium and discount, and we tend to look at once the options once the market opens, there's not usually on expiration a lot of movement. And so we were kind of discussing that pre-market with some of our traders. But what I noticed was we moved up on the SPY, and we had a big seller at 44.50, 440, sorry, and 50 cents. There was a big seller at $440.50.
What tells you that? How do you know that?
There's a big size on the offer, and it kept kind of punching up against it, went through it a bit, came back, the seller came back, and so there was just a lot of size around that 440 and 50 cents.
Okay.
So I shorted the SPY right there. Okay, because you saw the list of longs that I sent. Oh, by the way, I only had these were only my shorts: Baidu, Biogen, Fast, and Ross. And Ross was trading down over 3.5% this morning based on news. So I wouldn't have sent the order on that one either. But these ones were good candidates. I just didn't get filled on them this morning. So I didn't get filled on any shorts. So my only short is the SPY. And that's basically it started right in here is where I started shorting it. And then it dropped, and I was in the money, and it came back, and I shorted a bit more. So I was over short on the SPY compared to what I needed. And then the SPY dropped right as the market opened, and I covered into I covered into one of the prices here. Let's see.
Let me see what you used here, because I'm looking.
439.75 was my cover.
Oh, Rob. 439.71. That's low.
No, 75 was my cover. Yeah.
71, the low of the day. And I just want to point out to people here, because there was a lot of movement in the pre-market, and I missed it. I mean, after that big decline, I said to myself, I should try and buy the close and the SPOOs and see what happens. And I didn't, and I didn't give me a second shot at it. The close in the SPOOs was 0150. You went to 4,400 right on the kisser. So that closed, and then just to illustrate this was Rob, The close was 39.86. The low was 39.71. So sometimes, focusing so much on the pre-market and the big dip, I lost my focus that, hey, you're opening up into the close. That's support. You buy support. You don't sell support. So I just want to point that. And that's also important for individual stocks as well.
Well, just a context, because I know that I have orders in there to be filled on a lot of long stocks. That gives you sort of this advantage of, again, it's kind of like relationship-based trading. I just need adequate amount of short dollars to cover my long dollars, right? So I wanted to get position on the SPY first because I knew I was going to be filled on a lot of longs. So I wanted to get good position on it. So that's why I was watching SPY pre-market. We came so far off of the low that to me was premium. And I mentioned to the group that I was talking to in the morning, I said, it will probably drop as the market opens. And they said, well, that's good. We'll take that as a cue. So basically it did that, and it dropped right as the market was opening. The SPY just tanked. And then I said, well, I'm over short anyway, so I will cover into that. And then the rest is I'm still balanced on my long dollars and short dollars right up to now. I haven't done anything else since that cover right there. The rest of it's long dollar, short dollar balance. So I'll leave that now till the close of the day. That's fine. But anyway, it gives you an idea of really, really important to look at this context. What happened after hours, what happened pre-market, and, even what like Joel does, look at the whole Globex overnight thing to see where the highs and lows are. So kind of look at this as a number of different time frames. It's like, this is time frame 1, what happened yesterday. Time frame 2, what happened after hours. Time frame 3 would be what happens in the overnight Globex session. Time frame 4 would be what's happening pre-market. And when you take all of that into context, it gives you an idea whether there's premium or discount there. So I agree with Joel, and that is this, that we got to a premium setting from the pre-market low, but when we dropped, as we opened, we dropped right into the previous close, which is essentially a support level. And not only that, if you look at the daily on this thing, look at how this thing set itself up on the daily. Yesterday, we plowed right into the lower Bollinger Band, basically the trend line. We had a couple down sessions. We had, the worst week of, what we've seen in August so far, and even in July. So the setup was interesting from yesterday's rejection of the new low that it was doing within the 5-day, 10-day, 20-day context. It rejected that and closed higher. That set us up for today to sort of have that follow through. And that's why I was focusing already yesterday when I ran my stuff. I was focusing on the NASDAQ 100 stocks to be my longs. And then this morning, the NASDAQ futures confirmed that I was on the right track, because there was more interest in those names than there was in certainly the Russell 2000 stuff and things like that. So that's what I did. I just sent my orders for the longs and hedged with SPY. I also sent those few short orders, but they never were filled. So I guess I was my envelope wasn't right for getting filled on any shorts, which I didn't think the shorts would be advantaged today anyway under these conditions. So when you have volatility declining, right, as we looked at this is the VXX, the ETF that you can trade. We've looked at that for that declining volatility. We had our little bounce and we're rolling back over. Again, volatility just continues to decline over the long sample, and you got to use it when it's there, which we had a couple days. We had a couple days of increased volatility.
Yeah,
but it's always very short-lived. People don't understand that.
know.
You don't get a long runway on volatility. It's very short-lived.
I not got into it, but I had to discuss, the VIX, and I'm like, the thing with that, I mean, I have my own personal VIX with like the S&Ps and the 9-day average trading range. The thing with that VIX is that if you don't get out right and you don't time it, then it just comes right back in.
Well, you don't see, you never go long volatility. You use volatility. You expand your you expand your parameters and things, but you don't actually go long volatility. You short volatility after it's spiked and sort of the news is factored in, it's priced in. That's when you that's when you short it and down it goes. The decay, look at the monthly. The decay is far more aggressive than any of the short-term spikes, right? Here's the weekly. The decay is what you benefit from over and over again. So any of these short-term spikes usually are short-lived and then they decline. So obviously this was COVID hitting in March. March 23rd low was right there. But look at what happened afterwards, right? So you've got it's kind of like with merger trading, when you do risk arbitrage. Sorry, my voice is lost here.
They're not losing for tomorrow.
The merger has some premium when it's announced, and then it generally shrinks down to Nothingsville as the merger is consummated. So same thing with volatility. There's a decay especially if you're going to trade the ETN. So I've seen far too many people take positions in this VXX long, and then they sit on it and sit on it and sit on it, and eventually they got to puke it because it just doesn't give them their rise of volatility when they want it. You don't get to sort of choose when volatility is going to happen. There's a surprise, there's some catalyst, and it happens. But after that's flushed out, after the news is sort of priced in and we start rolling over, that's the time to short volatility.
Okay. All right. Rob, is there anything else you have to share with us today, or can we talk?
No, I mean, we can go through, a couple
of
let's
see. What do we got? Let's see
there.
From the chat. Hunter or and Hunter asked me a question, and it's not my ballpark. It's really, triple D's with his CFA. He goes, could you teach us how to do valuation on stocks?
Valuation like fundamentals?
Yeah.
Well, I mean, it depends what your other part of your game plan is and your duration of your trade. So if, for example, you had a pair trade on and you had, I think, I've always looked at pairs that it's about the quality of your long stock. Now, you don't want to subject yourself to massive risk on the short side, but the hedge is really what sort of keeps you more market neutral than getting an extreme advantage out of your hedge. You just don't want to be run over on your shorts. So the pair works because of the quality of your long stock. So it depends what you're doing. If you're just doing a trade for the day, that's very different than if you're building a position in a pair and then you're trading around that core position. So fundamentals that would go into stocks that you want to do that with probably are stocks that have earnings. Maybe their EPS, their earnings per share, is rising. Maybe.
And what do you consider? I mean, everyone has their own standards. I mean, different stocks, different.
Well, let's just look at, Apple's obviously a big stock. I've always felt that Wall Street never gave it the best.
Exactly. I agree.
Never gave it a really fair shake on things over the years. I mean, they seem to have favored a lot of other things, but let's look at what's happened with Apple. The PE is 28. Well, what's the PE of the market now?
Probably up there.
We're just about, we're around in that same area. So it's not above that. Price to book, that's one of the fundamental valuation. If we're looking at value stocks, you want good price to book. This is a bit flagged here that it's already risen substantially from what it used to be. So it's trading well above its book value. So the book value per share is $3.87, and it's telling you it's trading quite substantially above that. But you compare that with most technology stocks, and that's still a screaming deal.
Exactly.
Right. They've moved into issuing bonds and things. So with the debt to equity has risen. The fundamentals certainly have changed. They're a lot pricier than they used to be. But if you look at the earnings growth, the return on assets, return on equity, return on what is that? Investment. Yeah, sorry, return on investment. Those metrics there are often looked at.
Where are you pulling this from, Rob?
This is just FinViz. Yeah, FinViz here. So
but this
there's a lot of different ways to look at fundamentals too. So for example, if you wanted to play short squeeze stocks, right, that's a whole different approach. Many of them might not have earnings. It's all about the contrast between what's happening this year and what's happening next year or next 5 years, combined with what's the size of the float, how much of the float is short, what the prospects are for the company, sort of any news catalysts and things like that. But so if you're playing in some of the Russell stuff, you don't necessarily need earnings per share. But if you're in the bigger caps, that's going to be a big difference. Let's pull up Zoom, for example, or hey, here's Netflix. Netflix has been around for a while. Let's take a look at its fundamentals, right? So it has a higher PE than Apple. More than double the market. Price to book is high, but it wasn't, it's not off the charts compared to some companies. Debt to equity is actually fairly reasonable, but is this thing, starting to make money now? Yeah, I mean, it wasn't for a lot of years, so it's really improved the bottom line. So these fundamentals have improved. And has the price risen along with the fundamentals over the long sample, right? Let's say, look at a monthly here. So as the fundamentals, improved, the stock has also improved. Let's look at what's a real speculative name. Throw one out to me.
Zoom. Want to do Zoom?
There's Zoom. So Zoom's PE is much higher than Netflix. So again, this is price to earnings, and this is the trailing 12 months. And then this is forward looking when you think about what they're going to be doing in the next 5 years. So this is a forward looking PE. This is trailing 12 months, what they have been doing. And they don't have any debt, right? So you got to think about, they haven't leveraged themselves like some companies. So they've come into profitability, even though it's still on the lower end compared to really healthy big cap stocks. But are they growing? Are they still? Here's what's expected this year. What about the next 5 years? So if they can grow at that rate of 15% in the next 5 years, that will translate into probably improving this bottom line. If there's any disruption, if people leave Zoom to find a better platform, maybe Google Meet gives them a run for their money, in a really spectacular way. I don't know. But that people are pretty fickle. So the problem with technology companies is, they can be healthy one day and they can start to, erode that very quickly. If look what happened to America Online, right? You got mail, right? I mean, other things came along and people moved on. Or Joel, are you still using AOL email?
Actually, we still have an AOL address.
Okay.
For one of our many, I don't know why. That's where, like, when I sign up for stupid stuff and I don't want to be bothered, I just put down on, and then I don't even log into it. Lisa uses that account. So, all right, folks, we got a couple.
Let me just summarize it quickly. So obviously market cap is talked a lot about, but I mean, that doesn't really create value prospects to the company. It's just a market cap. It's like the market cap of Bitcoin. Okay, well, what's the fundamentals of Bitcoin, right? So ignore that kind of banter stuff. I mean, it's really about are they profitable, and what's that debt and the service of the debt in relationship to that, right? And then, how many shares outstanding, and what position is happening with the float. Like this is 5% of the float is short, so there's still a fair amount of people betting against this, thinking Zoom is gotten overvalued, which on a PE basis it kind of has. So you're looking at the price as compared to the earnings. You're looking at earnings per share expectations for this year, as well as forward looking to see because that's where analysts come in and make changes. If they, have a great earnings report and expect to make a lot, and the analysts agree, they will raise their guidance. They will, upgrade the stock. And so you have to pay attention to the earnings per share for sure. And, the debt load is important for two reasons. One, this might be an acquisition target for somebody because they want to leverage the company up because it doesn't have any debt. Or two, if it has great earnings or something like that, it's a cash cow. That might be a good acquisition target too. So you have to look at it both ways, both on the earnings side as well as the debt side. Anyway, I'll let you.
Yeah, we're just
I'm
just gonna wrap things up here. S&P still up 25 handles at 44.2650. Hit 33.75, folks. I got nothing up here. Tuesday's close was 43.50. We've already had a very expanded range day, but that doesn't mean that it cannot continue to expand. So right now, I mean, nice session, kind of full me today. I thought we'd have a little quieter day on this Friday in August, but that's what makes the market. So thanks for joining us here on this Friday morning, August 20th. Be sure you all are signed up for that event tomorrow. I'm going long. That it's going to take over 3 hours. Dennis has got tons of stuff. I know you do. I've done a lot of prep, and think it's be good. Something to do when the markets are closed, and it's important to focus on stuff. So thanks all for joining us, and we'll see you tomorrow morning.